wave study, Facebook stock on a 10-minute time frame. This is a simple study of how we think in waves. As we can see here, the up waves are in green and the down waves are in red. Each wave is drawn from the swing high to the swing low, or the swing low to the high. It is discretionary in how one wants to interpret the swing. Although I must say, for clarity, in my live trading on a day-to-day basis, I use the close to close as my swings rather than the high to the low. This is mere personal preference. Either or is fine. Like the way I draw resistance is different to most. Most people would draw resistance from this high, but from here we can see that bang, we go across and we contain prices. For whatever reason, we cannot close above this level. So I find this level of resistance valuable. And the same thinking goes towards the closes. I think what's important about the bar, as we know now, or I've tried to stress, is the close. However, there is nothing wrong. I know many Wyckofians who use the swing high to swing low on the extreme. So this is the extreme. I just use the closes. So when interpreting waves, we do need to apply a little logic that suits our own personality. For example, one could draw a wave from here, from E, all the way up to M, all the way up to N, and this would be the up wave. And then from N to P, and this would be the down wave. Of course, this is down to the individual, but bear in mind that we want to read the turning points as they unfold, as they provide data for the selling or buying pressure within the market. Personally, from E to P here, or E to N here, I like to have all these mini swings because we can read the imbalance between the forces of demand and supply. This all boils down to how close you want to be to the market. Okay? Good. Quickly eyeballing this chart, what can we see? Well, I'll tell you what I noticed straight away. We have a good drive up via I. Decent spreads, as we can see, and we break structure here. Followed by a reaction at J. What can we say about J? Well, it's weak. First of all, we can see that the spreads are nowhere near as good as the buying, so we have poor buying quality. More importantly, we are unable, look, this is our break, we are unable to come down to test support. That's valuable information. We then have a weak rally here, and then what happens at L? Look at L, even weaker still. This down wave here is very weak. The down wave is much smaller than that of J and is much smaller than the previous up wave at K. So this wave down we would class as no supply, and this is preceded by a good response at M, which of course this is to be expected after no supply. And we drive up, we break this resistance, we gap a demand imbalance. Look at the spreads closing firm. So we know for a fact that is no supply. And we can even draw on a little local level here of support, or level of support here, look. So we cannot even, so if this came down here, say with 50,000 contracts, this could come down with 10,000 contracts being traded on this down wave. Therefore, we know that there is no supply in this down wave. There is another important wave on this chart, and this is wave Q, this drive up here. Here we have good upside momentum, and this wave here R is the sweet spot within this trend. Why? Well, at this point, when we close up here at the end of Q, what do we notice? Well, we're clearly in an uptrend, making higher highs and lower lows. And what does this wave up achieve? Well, first of all, It's the largest buying wave we have on the chart. And what does it achieve? Well, it breaks all forms of structure, and we're breaking into brand new highs. This is a good stride up, breaking resistance, producing the largest up wave on the charts. Now we are waiting. We're looking, our ears are perked up for a weak pullback, which is R. And this is the sweet spot. After Q, this push up, okay, all eyes are on this reaction. We are close. We are involved in the market, trying to look at this or analyzing this bar by bar as it unfolds, as we have a reason to from this drive up, this new momentum. And we know that R is weak. We can tell visually by eyeballing the price action. Look at the spreads. But more importantly, look, the spreads are very narrow. What can we notice about this attempt to drive down? The angle of descent. There is no selling pressure, which of course we can interpret and read from the narrow spreads. But look, this comes down, this comes down, this comes down. Okay, this has the lowest angle of descent on the chart for a down wave. Importantly, after we've seen the largest up wave at the chart that breaks all areas of structure with good wide spreads. This is extremely important information. And of course, we use our comparative and relative analysis. We just compared to the previous down waves, and now we compare to the previous up wave. This is a no-brainer. So we're looking here where we could draw this level in, and we can see that we have a hidden spring. We have to buy that. There is no selling force as seen by the lack of descent or the angle of ascent. Now, this type of trading here is a momentum play. And there are a great deal of traders who specialize in these kinds of setups, as odds highly favor continuation. And in this case, to the upside after this weak pullback and the strong move up. We have good momentum here, breaking structure into new highs, followed by a weak pullback. So odds favor higher prices. We're playing for another leg up at a minimum. Momentum carries this higher. Good. There is a wave on this chart where we can extract more info. Can you see? Yes. Wave D, exactly. We can add more detail. And if we use our comparative analysis skills, we can see that the down waves here are getting larger, and the angle of ascent here is very fierce. It's increased. And importantly, that the down waves are larger than the up waves here and here. And we can see that there's much price bar overlap. It's very choppy behavior. So the buying is of poor quality. And if we add structure, this is a low here, we can move this across. And what's this? This is a hidden upthrust, followed by another strong move down. And if we add the channel, like so, we can see that we're applying to a supply confluence here from the hidden upthrust, and we become oversold here on our channel, which gives us our target, which is $3. $3 per share. It's a very nice trade. However, if we draw the wave like this, we don't get the opportunity. So it all depends on how close you want to be to the market. You may only want bread and butter trades like Q and R. These are different types of setups using the wave format. By using waves, we can quickly eyeball the chart. And if we see a selling or buying pressure shift, we can look within the wave using bars and volume to confirm our suspicions and make plays. I have briefly mentioned the word momentum, and it's something we must talk about. In our methodology, momentum is kind of a silent given as it occurs in many of our setups without using the word momentum. The jump across the creek or the fall through the ice that breaks support and resistance with good selling or buying is momentum. Or alternatively, a decent push up or down or good solid wave up or down. We would class these as momentum. For example, this is support. We're coming down, we're coming down, we're coming down, we're coming down, and bang, you get a good strong wave down. Notably larger than the previous down waves, and we're breaking structure. This is our momentum, and we can call this a new momentum low. Alternatively, if we break to the upside, this would be a new momentum high. And what we do from here, obviously, this is our rally back to ice, this is support, our ice. We want to see narrow spreads and weak buying, and we can apply our short plays after a good solid move down with increasing spreads, etc., etc. These are momentum drives down, and this is a momentum drive higher. We want evidence of good quality buying or selling that achieves something to note, i.e. breaking a structural location, preferably a wave that is notable in length, like here at Q. A good strong move, a good push up, that is the largest buying that we can see on the chart breaking structure. This is momentum, okay? And we can class this as a new momentum high because we're breaking into new highs. So any decent break of support and resistance, good length and price action, we would classify as momentum, especially if it breaks into new highs or lows, like I said, also known as a new momentum high, or if we break down with the largest selling, a new momentum low. And with changes of behavior, there are some waves that are momentum based, as in the shift from buying to selling is quite apparent. And in the following examples, we will go through change of behavior waves. Some will be momentum characteristics like Q, like here. We drive up with the best buying we can see on the chart that breaks resistance. And others not so, like E. If we look at E here, we can draw our channel down. Okay, so we do break the supply, but this is our high. But this is a change of behavior, because it's the largest buying we can see since this downturn trend has begun. That's buying, and that's buying, and this buying is the largest buying we see. However, it doesn't break into new highs like this. So this isn't a new momentum high. However, it is a change of behavior. Don't worry, we will go into depth and we'll go through various examples going forward. All of these studies can be applied in reverse for both selling and buying. So this wave study is bullish as we're going higher, and we can just reverse thinking if we're coming down. Good. On to the next study.